The Strait of Hormuz, the world's most critical trade choke point, is at the center of the economic fallout from the ongoing U.S.-Israel conflict with Iran, and nearly 20 million barrels of oil pass through this narrow waterway every day, accounting for roughly one-fifth of the global oil consumption. But despite U.S. assurances of naval security and a multi-billion-dollar insurance program for ships, commercial traffic through the strait has dropped sharply. Tankers are delaying transit, insurance premiums have surged, and several exporters in the Gulf are already cutting production as cargoes struggle to leave the region. The disruption is pushing oil prices higher and raising fresh concerns about energy security, especially for Asian economies that depend heavily on Gulf crude. But the impact of the Strait of Hormuz disruption goes far beyond crude oil. The waterway is also a major corridor for global LNG supplies, with roughly 20% of the world's liquefied natural gas trade passing through the strait. At the same time, the Gulf region exports massive volumes of petrochemicals, plastics, feedstocks, fertilizers, refined fuels, and industrial chemicals, all of which rely on this shipping route. With vessels avoiding the region and freight risks rising, shipments of jet fuel, diesel, naphtha, and chemical cargoes are facing delays. Even dry bulk commodities, including coal and steel, are seeing disruption as shipping companies steer clear of the conflict zone. The result is a widening supply shock that is rippling through multiple industries. But for global markets, the Strait of Hormuz disruption is quickly turning into a broader economic risk. Nearly 70% of the oil moving through the strait is destined for Asia, making countries like India, China, Japan, and South Korea particularly vulnerable. Higher energy prices are already increasing import bills, weakening currencies, and raising inflation risks. At the same time, disruptions are threatening manufacturing supply chains and agriculture inputs worldwide, and unless maritime security improves quickly, the economic cost of the conflict could continue to spread far beyond the oil market.